Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsarthi. And in this podcast, we are going to talk about the overpricing of corporate bonds. That is, when an asset is overpriced, that means it's overvalued and may not give the returns that investors require with an adequate risk protection. What is Let's Talk for Bonds podcast? It's basically giving you the options available for investors or financial advisors to recommend debt products to their clients. And how do you introduce debt products to their clients and how to fit bonds or any other product into a client's portfolio. And our bonds is helping financial advisors and investors to introduce debt and bonds into their portfolio. Our app, Quick Invest by our Bonds, gives you a curated list of bonds that is the best investment, that provides the best information, transparency, and our own proprietary risk score for taking a good investment on bonds into the portfolio.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Now, getting back to the topic that we're talking about, 5-year, the corporate bonds are overpriced. So let's take a look why it's overpriced. Now, if you take the ETF, which is a Bharat bond ETF, which is a index of PSU bonds. Now, these are not government bonds; these are PSU bonds, and they are the 10-year Bharat bond ETF is trading at around 7.7% or around those levels, and this is just over 10-20 basis points or 0.2% over the 10-year GSEC yield. And this is below what a state development loan is giving, which is around 780 to 790 levels. And the state development loans are much more liquid, given that RBI is making sure that there is enough liquidity. If the RBI even buys back state development loans, provides repo facilities to banks against them, and so hence and they also qualify for the regulatory requirement for banks. So clearly, SDLs are much more liquid than Bharat bond ETF, but still Bharat bond ETF seems to be priced less than over in terms of high trading at lower yields than state development loans. Coming down to corporate bonds itself, for after a long time we saw some reasonable pickup in yields with LIC Housing Finance coming to the market with a 7.9% issuance, 5-year bond. Now 5-year GSEC is around 730 levels, so it's around 60 basis points over that, which again is a low spread, but still reasonable pickup to the GSEC yield. But many other corporates, AAA corporates, are issuing 5-year bonds well below this 7.9% at spreads of, say, just about 30 to 40 or 50 basis points over the GSEC. And similar is the case with 2 and 3-year bonds. And hence, the question investors or financial advisors should ask is it better to invest in government bonds rather than corporate bonds? And also, in some even the lower rated bonds, that is bonds below in the AA to A rating or bonds, their yields are also not come down despite government bond yields moving up very sharply. Lower rated bonds continue to trade in a range of 8 to 10%. Some of them have gone up, but not so much like the government bond yield. In one sense, these bonds are not interest rate insensitive because anyway they've been trading at much higher yields than the government bonds. But when government bond yields have gone up, then and there is more risk in the economy due to inflation, investors should now think about whether they should take risk in higher risk in corporate bonds for higher returns, or is it safer to go to government bonds? Some questions to ask. The answers still be uh, given. INR Bonds is conducting many webinars on whether to invest in government bonds or corporate bonds. We put out a lot of research, and obviously through our Quick Invest app, the corporate bonds, we feel that the bonds meet the risk return criteria of investors. We curate it and give it. While we also have a wider market watch screen that gives you all the corporate bonds that is listed and offered in the market, about 100 plus bonds. Investors can come to the website and take a look at the market watch, or they can download our app Quick Invest by INR Bonds for looking at the curated list of bonds for investments, and it's a seamless in-app investment process. That's about it for now. Thank you for listening in to the podcast, and do follow us on all the podcast channels from Apple Podcasts to Amazon Music and Spotify and YouTube. Thank you for listening in.